Hello, good afternoon, and welcome back to our Candid Conversations, which is our conversation that's held or facilitated by the Jamaica Chamber of Commerce and Action Coach Jamaica. So I'm one of your co-hosts, Arlene Martin from Action Coach, and our other co-host is Neita, who is second vice president at the Jamaica Chamber of Commerce. So we're resuming after a short break post-elections and coming back to you and just as a reminder to you what this is all about. And one of the things that's always good coming out of, let me say, situations, not necessarily crises, is that there is greater collaboration. And with the Jamaica Chamber of Commerce being the voice of business in Jamaica and Action Coach Jamaica really facilitating growth of business owners for Jamaica Abundance, one of the things that we thought that we would do is lean on the voice of Jamaica, the Jamaica Chamber of Commerce, as we have conversations with business leaders, with business owners in Jamaica about how they've been responding to COVID. However, as we move forward, we're not going to be focused so much on the survival and how we've responded, but how is it that we move forward with resilience, rebuilding the economy? So the language has really changed, and so it's a good time to be resuming and having this conversation as we speak to our business leaders. And we'll let you know too about business tips later. But we're going to continue our conversations. And today what we're going to be doing is having a conversation and sharing more with you, our audience, about some of the things we've already discussed and where we are with some of the sectors that we have already talked about. So, Ian, we have had discussions with tourism, we've spoken about agriculture, logistics, finance. And since our conversations, and our conversations started fairly early, we weren't at community spread. We hadn't yet seen some indices and some quarterly reports by the PIOJ. So give us a sense from Jamaica Chamber of Commerce and even just your own professional interaction on where you see things now at this stage of the pandemic in terms of where we are in Jamaica and how the economy is responding post-election. Just give us for a few minutes your thoughts on where we are.
Thank you, Arlene. And as usual, it's a real pleasure to be participating in this partnership. Jamaica Chamber of Commerce, we're the voice, but if we're not interacting with organizations like Action Coach, and which has provided us with this channel, then the voice will be silenced. So we're very happy for this opportunity. It seems like it was a long time ago since we started out, and it seems like such a long time since we had a total lockdown in businesses and schools. And it almost feels as if life has moved on in a kind of way that in order to prevent this COVID fatigue, we have found new ways of maneuvering. And in the period between the time we started and now, so much has happened,
Yes.
And so it's good for us to take a little time now to recap and look at some of the developments that have taken place. So if we start in a broad way, from a macroeconomic standpoint, we have moved from a situation of uncertainty and almost panic to one in which we are now trying to figure out how to deal with this new economic environment. So if we look at, for example, exchange rates, let's start with exchange rates. Exchange rates at one time, I think in late August, we saw the exchange rate like going through. We're buying currency at 151, US dollar at 151.
That's true.
And businesses really went into a panic, and that led to us really trying to buy up. I remember our company saying, "Should we be buying up now? Because what is happening? Is this going to 200?" And I think that the central bank has done a very good job in intervening. I think what they did was they started to take some of the demand and fulfilling the demand directly themselves, I think like JPS and so on. And that took a lot of the pressure off the foreign exchange. The shortfall then in foreign exchange. The overhang was about 800 million to about 1.2 billion, somewhere
Okay.
in that region of unfilled demand. Now, it's hard to tell how much of that was real, genuine demand, because in that same period, the imports fell by about 30%. So that
Okay.
take a lot of the demand off.
Hmm.
And normally in a country when imports are going down, you would say, oh, that's a good thing, because I mean, we are import substituting. We weren't import substituting because our exports fell by a similar figure.
Hmm.
But since imports is larger than exports, the net effect could turn out to be positive. But the downside to that is that a lot of our imports go into providing raw material
Yes.
for manufacturing and
Hmm.
so on to go. So the combination of the slowdown in imports and the intervention of the central bank,
Hmm.
the dollar can now be purchased, I think, somewhere in the region 141 to 143.
Just about, yes. Hmm.
So I think that is a sign of some sort of stability and predictability, which is good for business. So on the
Okay.
foreign exchange side, but then Arlene, you have to also, and we will touch on that in the future. I mean, the
Yeah,
future
because I think I have
flows,
a related question to you, but
yeah,
please continue. Hmm.
yeah, but the related flows, we have to have a discussion around what the
Yes.
future flows likely to be.
Hmm.
So let's go to exchange in interest rates. The
Yes.
central bank has been able to keep interest rates
Hmm.
down. Things at a
Hmm.
0.5% now, which is good.
Hmm.
It
Hmm.
means that the overnight lending rate to banks would be in that region. And we're managing, the central bank is managing inflation, which would,
Okay.
it's projected to be anywhere between 4.1 and 4.6%.
Hmm.
That again is good for businesses. We like to have that level of predictability in
Hmm.
business around, what is the cost of payroll going to be like, and all our input materials and so on. So that again is another area where we're seeing, even in the turmoil of COVID, we're seeing a level of stability, and then it comes to growth. The growth in the GDP, of course, that is a problem, because in one quarter we saw 18%
Yes.
reduction in GDP. That's a
That
huge,
was the quarter ending in June, correct?
in June.
From
That's
the
huge,
PIOJ report, right?
right? Now, what that says to you is that your economy is shrinking.
Hmm.
But the upside of this is that the forecast for the fiscal year is 8 to 10%. And
Hmm.
that says to me that on an average, if you did 18 in one quarter, then you have to balance it out. And
Hmm.
so, evidently, from a starting standpoint, the outlook for the next quarter, it should be good. You know, Not
Okay.
sure where that is coming from, but when
Hmm.
you hear even the minister of tourism, Honorable Edmund Bartlett has been, being upbeat. Well, he's usually upbeat about about his sector. But we can go into a discussion about where we think
Yes.
the growth or the slowdown in decline will come from to end up at 10%.
Okay.
You
Yes.
know,
And when we look at that, a lot of that in terms of those sectors, so it had split it for both goods and services. And we knew the sectors with the biggest impact. So on the services side, we had hotels and restaurants. On the goods side, mining was where we had the biggest decline.
yeah,
However, things weren't so bad when you looked at agriculture, manufacturing, a number of these areas, which would have also been impacted by, I would say, some of the factors that you spoke about when you talked about inflation as well as the exchange rate. You mentioned with the exchange rate about, the supply for raw material because we're bringing things in. What would that have meant? However, the good thing, as you're saying, is that there is some stability now.
I
So,
think so. And because we are so vulnerable to externalities of what happens
mhm,
in other economies,
mhm,
the foreign direct investment has declined
yes.
significantly.
Mhm,
I think that went down somewhere in the region of maybe about 40%
mhm,
in the foreign direct
mhm,
investments. And of course, it is about a wait and see approach that is taking place. But I don't know how much of that has to do with new projects and how much of that has to do with a stalling of existing projects. You know what I mean? If we
Right.
have projects in the pipeline that people are saying, right now, I'm not going to finish these projects, like some additional rooms that we're supposed to be getting
Yes.
in tourism and so on. Is it a case where, you know, they're saying, I'm going to hold off? That means those flows will be delayed and not necessarily denied.
Right.
And therefore, or how much of it represents, you know, what would normally be new investments where people are saying, I'm not going to be bothered with that anymore. So we have to do a little bit of drilling down to find out about those capital flows
Yes.
that we are
You know,
expecting.
it's interesting that you mentioned the foreign direct investment. And by the way, just for persons listening, there is a chat feature, and we do want to hear from you in terms of what are some of the things that you want to hear about from us, whether specific sectors or particular cross-cutting issues, such as the economy, where we speak about foreign exchange, inflation, and things like that. So back to your last comment there on foreign direct investment. The recovery for FDI might be a little longer. We're in a global pandemic. And so we're recipients of the foreign direct investment. And it's not what's happening with us only that's impacting that, but also what's happening with all these other economies. And so, how important is it for our recovery for us to focus on our domestic sectors? So that's one part of the question for you. And when we're now thinking of maybe revising our foreign direct investment strategy, and I remember that JAMPRO did a workshop just maybe 2 months ago, I'm not sure, but just looking at what are the areas of focus now is the country may have to look at new sectors. So where projects might have been delayed or shifted, things are really looking different in different sectors. So if it were heavily tourism, are there new areas that we have to look at for that FDI? So two parts of that for you, Ian, is balancing the growth and recovery from our own domestic sectors and domestic investment, and then maybe where we need to look for that FDI. What do you think?
Well, our major trading partner and investment partner would be the United States. United States suffered on an annualized basis a 32% decline in their GDP last quarter. The United States is in the throes of a severe pandemic, and they're facing an election. And there is no clear path to a recovery. And therefore, we cannot really hang our fortunes on what America will be doing in terms of us receiving foreign direct investment. United States is going to try to fix their economy first before looking outwards. So it makes your question very relevant, which is, what can we do in terms of our local investments? I want to share with you and our viewers, Arlene, a survey, and this will help us to see the particular outlook of the business community, in particular the Jamaica Manufacturers and Export Association. So they did an impact survey April 28th to May 22nd. That now, any statistic that's more than 2 months old in this environment is considered old, but I mean, it's what we have to rely on, and it's a strong indication of how people feel. So it said that some 59% of businesses were considering temporary or permanent closure. That will have a significant impact on investments, because if 40% of businesses are closed, even half of them, even 20% of them close, because you have to look at it from a standpoint, you have to kind of filter out the emotional part of that. There are a lot of people who feel, oh, my business is going to close. And then, they get through that period and they say, no, we can do this and we can come back. So even if 20% of businesses close, that is going to have an impact on investments. Locally, the 57% received new business opportunities from this pandemic.
That's
57%
good.
received new business opportunities. So that's a counter to it. That is what tells me now. That's what gives us this hope and this optimism that people are changing the way they do business and there are opportunities. 57% of businesses. 22% started producing new items.
Wow.
That sort of tells you the flexibility, the level of nimbleness, how quickly we can retool and get up to speed. That's good news. 22% started
Very.
producing new items. 51% temporarily reduced staff. 14% laying off between 20 to 50% of staff.
Mm-hmm.
Now, they're probably doing more with less,
Yes.
which actually speaks to efficiency. So what this tells us, though, is that the Jamaican businessman is resilient and robust in terms of looking for new opportunities, and that is why we are not feeling the significant fallout in businesses that people had anticipated. Now, in order for investments to take place, there must be access to capital, and I think that's something that we have had a few interviews on, Arlene,
Yes.
on that, and I don't know if you want to expand on that, because that is
Right.
going to be now the fuel for driving these ambitions to take on of this 57% which has new business opportunities.
Okay. So it's interesting that you asked that, and you mentioned the survey done by the Jamaica Manufacturers and Exporters Association. However, the Jamaica Chamber of Commerce, your conference board, always does quarterly. You have your consumer and business confidence indices. And there
Yeah.
was one survey that you had done for the same quarter, well, roughly, but the quarter ending in June. And in that one, 52% of the firms in the April to June period had implemented layoffs, reduced staff,
Right.
etc. Some of them up to 57%.
Yeah.
Now, interestingly, with that, so when you spoke about the JMEA survey, you mentioned the negative, you mentioned the positive, and you mentioned that 57% of them got new business opportunities, 22% of them introduced new products or services. Now, when you look at the workforce displacement, if that's what you want to say, in terms of the impact of the layoff, maybe even salary cuts, etc. Interestingly, from the survey from the Jamaica Chamber of Commerce is that quite a number of the persons who responded, so when they spoke to the workforce now in terms of what next for you, a significant number of those persons said that they were going to be looking to start their own businesses rather than looking for a job. Some of them had indicated that they would be using their own savings, going to family members, and some of them said that they would approach financial institutions. So I was going to be coming to you about that in terms of, so you speak about the importance of needing this base of businesses in order to attract investment. However, for these businesses to continue, it comes back to financial institutions and the support that is there and the support that is going to be needed. So as you mentioned, we had spoken to, 3 financial institutions. So on the private sector side, we spoke to First Global and we found out about how they were responding, some of the programs. And so this is now how we are reminding our audience, people watching, people listening, about what's out there and available. So they spoke about programs that are targeting particular sectors for new ventures. And they were looking at new ventures entirely, but there was also the opportunity for existing companies that were doing new things to go to banks. And I'm not saying that it's only First Global that you go to. It's just that we had a conversation with First Global and we know about some of their products, some of the things that they've been innovating on. And very importantly, and this is probably now for those people who are starting smaller enterprises, that labor force in terms of the displacement, we also spoke to the Development Bank of Jamaica. And in that conversation, the development bank was just announcing a new program, which is boosting innovation, growth and entrepreneurship ecosystems. I call it Biggie. And within that, there's an innovation grant, there's a seed grant, and they continue to execute on the voucher for technical assistance so that people can get technical support. So what has happened is that from those conversations that we've had, and I think we'll continue to have those conversations with the financial institutions, they have seen the same things that you are talking about. And they are responding to the opportunities that are out there to finance not only new ventures, but new ventures within companies. And so they're responding to that. So whereas the DBJ product and some of the products that I mentioned for First Global are for new ventures entirely, you also had the Exim Bank. And people tend to think that the Exim is once you're trading, you have to be exporting. However, they have other programs as well. And a couple of the things that they shared with us was they spoke about the tourism COVID grant. And interestingly, that deadline, it would have ended in September. They actually extended that to the end of October. So again, just sharing some information for persons out there. And another thing that's actually very good right now, as you know, we haven't touched specifically on the cash flow challenges that firms have, but we're aware of it. Exim is aware of it. And so what Exim has as well is, it's called Exim Express, I believe. And what they're looking at is COVID receivables financing. So Exim usually does receivables financing, and they've looked at something in light of what's happening there. So the positive thing, as you're saying, is that the financial institutions are responding to the needs that are now emerging, and the needs of the companies based on the opportunities that they're responding to. However, what you've shared in the reports that you've indicated and from the Chamber's own survey is that businesses and individuals are responding to the opportunities out there. So I think that's very good.
And I want to just use this opportunity to put in a plug for the JCC Business and Consumer Indices release for the third quarter.
Yes.
That's going to be coming up on Tuesday, October 20th at 9 a.m. to 11. And it will be via Zoom. And this, of course, is sponsored by National Commercial Bank, one of our business partners and members. And it is going to be, well, just to go back to the second quarter results. You know, the second quarter results just coming straight out of COVID. And in that one, you know, it showed that 68% of the businesses experienced revenue losses. And
that's a high percent.
Yeah, for those who had to lay off staff, on an average, it was by about 57%. Only 49% of those businesses were optimistic that they will survive. And 78% of the businesses anticipated recovery in Jamaica's economy between 1 to 3 years. So again, it paints a very dire picture, but it also provides a level of hope and optimism to a certain extent. For the first time in about 20 quarters, we had a decline in the consumer index and the consumer confidence index, and also the business confidence index. But that was not really surprising, you know. It was taken at a time when, you know, in the middle of a pandemic. So we are looking forward to the next survey that will be presented on October 20 to see now how businesses feel about the future, and especially given, you know, we're in a post-election period, and we are getting a better handle on what the virus management looks like. We're into a second wave and maybe a third coming up, and so on. So we're very interested. But Arlene, I want to just go back to the financial discussion that we just had about financing, because it's critical, and that is why we had so many institutions coming in to talk to us over the past few months, you know, because we know that it's the engine of growth. You must have capital to
Yes.
grow. And some between 50 and 60% of the GDP is accounted for by micro, small, and medium enterprises. And so these are the companies that are most in need of financing. And I think we are blessed to have a financial sector that is far more robust now
Yes.
than it was in the 90s, for example. And, you know, it is, I mean, we've learned so many of our lessons, and now we have deposited insurance and we have all kinds of measures in place to you know, keep confidence high among depositors and business people. But we've seen where banks during this period are they're obviously concerned about the level of, you know, bad loans, good
Hmm.
loans going bad, good customers going not
Hmm.
so good, because obviously if a business is under pressure and you can't meet your loan payments, that's going to be a problem for you.
Yes.
And so banks are now very cautious. I know interest rates have gone up, and it has gone up because they have had to try to cover some of their exposure to
Hmm.
doubtful debts, doubtful loans, and therefore, you know, that makes it a little bit more difficult to access capital through the traditional route. So that when an Exim Bank or a DBJ comes along, that does provide a real relief to
Hmm.
especially the small businesses. But we still have to be thankful that our banks are taking measures to protect their
Yes.
survival. I mean, because we don't want to have a problem in our banking system,
Yeah. And
because
you know,
that speaks to the core of the economy.
right. You talk about finance and the access to finance, and we probably will have to have the DBJ return and this time talk about the venture side of
Yeah,
things. The program that I just mentioned, there is grant funding associated with that. However, they do have a venture capital arm, so maybe we'll have to get them and other persons talking about that. Very important side to that access to financing is now the businesses capacity for managing cash, developing strategy, some of the things that the financial institutions need to be able to trust them, to be able to build that relationship in terms of making a good decision and managing the relationship that they have, and not just about the loans.
yeah,
So, and this is where Action Coach comes in. And not Action Coach on our own necessarily, because we work with individual companies. However, we work with financial institutions and we partner with them for the capacity building of their business owners, so that their business owners have are better able to manage the loans, to manage their businesses for financing. You know, it's interesting. One of our clients was sharing recently in one of our sessions, and this business owner said, you know, had I not gone through this Action Coach program, I don't think I'd have survived. But
oh,
had I done it because I knew about cash management and because I'd taken my business to a particular stage, I honestly think that's the only reason. So you will hear from Action Coach soon, because we're continuing to work with our partners in the financial sector for them to be able to strengthen, support, assist their businesses now on the capacity side. So we're addressing that area that you're talking about in terms of loan performance, because sometimes it comes around to the capacity side. And, you know, bridging that, businesses should reach out to DBJ for the voucher for technical assistance, to get a voucher for the business plan, for the auditing, for the marketing, for web design. There are so many things that these institutions and partners are doing to help businesses. So I think we really have to keep that going. But let me ask you, Ian. So we've spoken to tourism.
yeah,
Interestingly, agriculture has come up quite a bit. So when we
yes,
first spoke to the minister, he spoke a lot about agriculture, interestingly. Then we spoke to Rita Hilton in the agriculture sector. We heard about loan programs targeting agriculture, just really popular. And in tourism, we spoke about agricultural linkages. And we saw post-election where agriculture now is its own ministry. I don't know if that's a sign in terms of the importance or the significance that agriculture is now having. It's one of the sectors that didn't have too much of a dip at the time that the previous PIOJ report came out for the quarter ending in June. But touch on a little bit on some specific sectors. Tourism, we've spoken about tourism, agriculture, and just any other sector. What are some thoughts that you have there? And I do believe too that you're we'll hear more from the chamber and tourism. You're scheduled to have a conversation soon.
Yes.
So looking forward to getting that update through the chamber and tourism in terms of what's happening there. But for now, give us some thoughts on tourism, agriculture, some of our important sectors.
Well, let me just start with some of the. I'll come to those two important sectors. But
Okay.
one sector that used to be very important for us was mining and alumina.
Yes.
The alumina sector, bauxite and alumina, that has taken a nosedive.
30%, I think.
One of the biggest demand for aluminum is in the airline industry, obviously.
Yes.
And we know what has happened to that industry. So that is going to take a while for that to recover. And so that decline has impacted us quite a bit. The other major area in our economy is remittances. Remittances,
Yes.
you know, strangely enough, in June, remittances recovered they grew by 42% in June, having had a decline in the first quarter. It does not, well, a lot of that came because the stimulus checks were going out.
Right.
Those checks have been suspended now, and the U.S. Congress has not been able to get put together a deal on that. So I expect that it will take another dip, the remittances. And therefore, it means that we now have to go to look at agriculture and tourism. Agriculture, we spent quite a bit of time on it, and it is one of the industries that was least affected by the reduction in GDP, and also manufacturing.
Right.
A part of that obviously was because the demand for agricultural produce, it went up during the lockdown, and people just started to support the local industry a lot, and it should inform movement towards self-sufficiency in feeding ourselves.
Yes, that's an excellent point.
There's a lot we can do still to encourage investment in agriculture. There are some big projects on the drawing board, and I don't know what the status on those now. What we should as best as possible try to encourage those. But agriculture and tourism are codependent,
Yes.
because obviously the supply to the tourist trade is important for agriculture. And so if we can get tourism going again, agriculture will be buoyed by that. And talking about tourism is so interlinked with every other aspect of our economy, even banking.
Yes.
We know transportation, tour operators, attractions, airlines, hotels, restaurants, everything it touches on. And so it's very important that we focus on getting our tourism back to good health. And speaking of health, I think the health and safety protocols that were introduced in tourism have been just stupendous. I think that, I don't know if you've been into a tourism establishment. It's like it's like you're in a sterile environment. Everybody is having their face shield, their mask, their sanitization. They're taking it very serious, social distance. In fact, they have said that since we reopened on June 15th, there has been not one transmittal of the virus from a visitor to any of our
Yes.
workers. That's an important statistic. It just tells me that we're doing a good job in there. And of course, we developed the resilient corridor that is it's supposed to be a safe zone, you know, so you can travel
Yes.
from your hotel to your attraction and back and all of that. So that I think is also
And
we score very high, and of course,
which is good because other industries can learn from them as well. So that's a good
absolutely,
point. Thanks.
yeah. But you know, talking about other I don't go anywhere in Jamaica in a public environment and don't see everybody, you know, with their mask, and you have to take your temperature and your sanitizer and all of that. I just think that we're doing fairly well in our public spaces. I think where we fall down sometimes is on the, you know, having parties and all of that kind of thing,
Yes.
and the funerals and weddings and so on. But I think generally speaking, we as a people, we have really adapted very well to some of these measures,
Yes.
you know.
And you know, speaking of measures and what's important in some sectors where we have high interaction, there's high interaction in retail.
Yes,
And retail is very important because we speak about the number of jobs in tourism. We also speak about the number of jobs in the retail sector as well. And so we
absolutely.
have spoken to players in tourism next week. So a week from today, we are going to be talking to retail, and we're going to be hearing from clothing retail. So we're speaking to Mars.
Yes,
So we'll learn about even how they're investing through this time, which is a great story. Looking forward to speaking to them. And then we're going to be speaking from the lifestyle side with a couple of the Unicoma brands as well. So we will hear about retail next week. Again, one of our critical sectors. And we'll continue talking to other sectors. We're going to be talking to real estate. We're going to hear about insurance in terms of what's happening. And again, just want to reach out to persons to say, what are some of the sectors that you want to hear us talk about? And if not sectors, what are some topics? Is it entrepreneurship? Is it starting up? Because we're hearing about new businesses, innovation. Who do you want to hear from? So we really want to encourage people to reach out to us, participate, and let us know what some of those things are. So talk to us, because you started indicating, you know, this is where we are. What about moving forward? So
right.
please continue.
So I'm so looking forward to those conversations that you've outlined, and because it does provide us with the source of information and content that we need to share with our membership. So really looking forward to that. And you spoke about retail a while ago, and I don't know if we knew that, like, Price Smart had a 11% growth during this
Wow.
period in retail. So retail has been doing very well during this time as well. So back to tourism, though, I think that tourism, we're going to have to rely sort of disproportionately on tourism to take us out of this particular situation. And the reason I say that is because tourism that sector is one of the few sectors that can turn around very quickly. You know,
Okay.
you just start to get visitors back into Jamaica because the infrastructure is there already.
Yes.
It's there already. In manufacturing, sometimes when you have a downturn, you lose markets. You have to reestablish markets, and you know, you have raw materials to deal with. You have machines to start back up, and so on. The tourism is one of the few areas that we can really move forward. But for that to happen, I think we need this rapid test immediately. We need to do the investment to get this rapid test so that when visitors come here, they can get a result in 5 minutes or 15 minutes, and you know, just get on with their vacation. That's going to be important. I think we're going to have to, and of course, the minister announced this insurance that tourists will have, and you know,
Yes.
if you get sick, you can fly them out, and all of that. That's good. That what that does, it gives you that level of safety and assurance. When you visit Jamaica, you say, well, if anything happens to me, you know, I have this insurance, and this is what it I think that's a brilliant move. I think we need to continue to focus on the staycation. I think that
Yes.
we must not let the Jamaican public feel as if they're being used. That, when you're down, I need you, but when things are back up, you can't even come into my hotel. We
Hmm.
need to continue to encourage Jamaicans to vacation here. It is a
Yes.
new market for tourists, and we must encourage that.
And we should enjoy our own country.
And we must enjoy our own
We
country.
should
It's so,
invest in and spend in and support. It's just another sector for us to support.
absolutely, it is going to be critical going forward. And then, of course, we need to really move on our community tourism. We need to
Yes.
we need to we need to take this as a signal. We need to move away from this all-inclusive
Hmm.
concept. No, I'm not saying build on it. Keep
Yes.
it, but build on it. We need to
Hmm.
develop the community tourism, because of our culture is so rich, and we need to get people into the communities
Yeah.
and the
It's it's like
homestays.
right. It's like a new arm of linkages, but it's more
Yeah,
about the experiences. It's more about the culture, and so these entities can connect into those sectors. When you spoke about tourism, one of the distinctions that you made with tourism and manufacturing is the ease of reopening, of getting started. A number of things have to be done with respect to manufacturing. Interesting, because even if you think about like garment manufacturing, something I'm a little familiar with is
yeah,
we have to think about now the placement of workers, and you
yeah.
have to think about go back to a cottage industry, etc. So let us, if you think about it, then when we're thinking of sectors, and this is not a necessarily, and sometimes people move away from this, cherry picking and having your favorite sectors and want to favor, but we have to be realistic as we are rebuilding the economy. And we look at things like pace of getting things started, level of investment, skill, knowledge, what is out there, because we spoke about the displacement of workers because you had layoffs. So there's a labor pool out there. Are they available for IT? Are they available for the creative industries? What sectors are they available for, and where we could quickly invest in some areas? So that's another sector that we have coming up, by the way. We're going to be talking to some people in information technology on in terms of as an industry, and then how it is as an underlying support. So we are going to be talking about e-commerce because people have gone into that area. So Ian, is the Jamaica Chamber of Commerce a part of that conversation about new sectors, or are you still focused um, on the existing ones and the resilience of our existing sectors?
We don't have an active program at the moment for identifying and promoting new sectors, but we're looking within the existing sector. The BPO sector is one that we're giving some attention to, because there is a tremendous opportunity there for going up the value chain,
Yes.
um, providing more back back office operations,
Hmm.
increasing the earning powers of those individuals, employees in that sector. And
Hmm.
it's another sector that you can
True.
ramp up fairly quickly.
Yes.
And so that's another area in which we're looking. And I think we should have a conversation with the players in that industry, because there's a lot of controversy. It was one of the first sectors that
Yes.
created a spread in the virus,
Right.
and we need to give them an opportunity to clear their names and to actually
Yeah.
tell us about what they're doing. Because I'm telling you, they have a fantastic program for expansion and increasing improving the value chain.
So, a quick question for you, Ian. Could you remind us, in your substantive capacity, your full-time role is with which company? If you could kindly remind us.
I'm with
Yeah.
you.
All right.
Media
So
Group.
I just hope everybody else knows that. And
Yes,
I asked that because, as we were talking about technology, and we were talking about e-commerce, and I said, oh, let me shoot a question to you, Ian, because one of the things now that people have to differentiate themselves is something as simple as marketing. And when you talk about the shift to digital, for some time now, Yellow has been moving from, the physical phone book. Someone saw me pull one out the other day and said, oh gosh, what was the comment from this person? Well, that's a classic, or there's something like that. But I know that most of your work now is online. It is digital, and there's a lot of that kind of sophisticated thing in terms of listings, ratings, linking into Google search, so that there's so much more that you're offering. So that's a little bit in terms of technology. Have you had to do any further shifts? Have you had to respond at all to this to be more relevant, to be more of greater service to your clients, to your customers?
So
A Yellow perspective.
Like all other industries, especially in banking, you notice that banks are pushing their customers out of the banking hall to online. Flow has seen a 47% increase in the demand for broadband since COVID. What that tells you is that people are going online. And we are facilitators of commerce, in Yellow Media Group, and we could for another time have a complete discussion on that. But seriously, we have had strong demand for e-commerce websites. That's the biggest area of growth, because people want to now be able to, we're moving into almost a touchless society where we're using apps to interact with our customers and our businesses. We're using e-commerce to settle our payments. People are not walking into establishments. And so these are two of the areas that we're seeing growth in, where people want to develop apps to be able to interact and to be able to substitute for some of their customer contact. And so it's a very dynamic time. I mean, we've seen some reduction in advertising spend, because it's one of the areas where people will, it's a discretionary spend. It's a vital spend, because it is one of the spends that can take you out of a difficult situation like this.
Yeah, that's true.
Yeah. So we'll have a conversation.
We will have a conversation on that. So as we say, one of the topics that we're going to be talking about when we talk about technology, I think we're going to have a 3-part on technology, because we want to talk about the movement of goods with logistics, but we want to talk about too the movement of services. Is how else do you deliver your services leveraging technology? And we're going to be talking about e-commerce. So looking forward to your special participation, that based on how it is that you can contribute to that conversation as well. So, as we said to our listeners, we have a number of conversations that are coming up in our Candid Conversations series. We start next week with retail. So you'd love to hear about what's happening in retail and some of the things that these people would like to share with us. So it's great for business owners, business leaders to hear about what's happening, how they can tap into that. We're going to be talking about real estate, insurance, security, so many things. And we definitely are going to continue with finance, because that continues to be very important and very relevant. So we encourage you to come back every Thursday at 1 o'clock here for Candid Conversations. Every Tuesday we have business tips, also at 1 p.m. And outside of that, just to share with you, to remind you that listen out, the Jamaica Chamber of Commerce is going to be sharing for the previous quarter the business and consumer confidence indices, and that's going to be on October 20, Tuesday, October 20. Ian, so listen out for that. And even for us at ActionCOACH, connect with us. We have programs that are coming up, some exciting programs that are going to be launched for 2021, but we still have programs for this last quarter of the year, including a workshop also that week in October, and we're focused on time and productivity. So you talk about the efficiencies that people have gained in terms of productivity. So, connect with us so that you could learn about how to be more productive at this time when you're working from home. So Ian, thank you for another great conversation. Really looking forward.
it's always a pleasure, and I just want to leave on a little note because
Yes.
as business people, we are here to support Jamaica,
Yes.
and we're here to help Jamaica to grow and become prosperous. There is
Absolutely.
a dire need right now where the government is behind, significantly behind on its tax revenues, and we know why. GCT is down,
Mhm.
business is down. It is going to affect all of us. So anything that and in addition to that, they have had to spend an extra $17 billion just to deal with issues like COVID and so on.
Mhm.
So whatever we can do at the micro level, at the business level, to grow our businesses, to become more
Yes.
efficient, to take advantage of the opportunities that we know are out there, it is to that extent that we will help the government to fill this gap and to return to a period of growth that
Mhm.
that will make all of us, want to live and
Mhm.
raise our children and all of that in
Yeah.
Jamaica.
Yeah.
All right. Thanks a lot, Arlene. Thank you all.
Thank you. Thank you, everyone. Another great session, and we will see you next week. Take care.
Okay.
Bye.